interest rates are having a massive impact on the housing market this year, dampening housing activity by shackling inventory and making it even harder to mortgage a new home. It appears now that they're also pumping the brakes on home improvements and remodeling markets as well. Let's bring in Yahoo Finance's Dani Romero to give us more insight here. Hey, Dani.
Good morning, Brad. Well, America's obsession with home improvement or becoming that fixer-upper, it's really turning a page. Research from Harvard University found that total spending on home improvement is expected to decline 7.7% over the next year to $452 billion. These expectations really highlights how much the home improvement sector has drastically changed since the pandemic remodeling boom. The rapid rise in interest rates has made some homeowners really sideline those expensive projects. I spoke with one homeowner who told me right now she's just focused on just doing some touch-ups, changing appliances. She's really not interested in remodeling. She said she would love a new kitchen, but that's really just not in the cards given the fact of just these high interest rates, and she's not willing to take out a loan for those projects. Another key point to highlight is high home prices, budget busting inflation, and high mortgage rate costs has really also impacted the resale side of the housing market. And that impact is very meaningful to the home improvement sector. Experts say that a lot of remodeling happens during a time of a sale for a home. And because it's been so stagnant on the resale side of the housing market, a lot of people who would have purchased a lot of people that have purchased new homes are likely not going to be remodeling. And so the expected decline for next year, if that does happen, would be the first decline in over a decade, Brad.
So Dani, real quick, let me just jump in here because I think a lot of people want to know, investors out there, how this affects some of those home improvement retailers when you're taking a look at Home Depot and Lowe's. I guess how big of a hit do you see this potentially having on them?
Shauna, consumers aren't quite completely throwing in the towel just yet. A survey from John Burns Research and Consulting found that 1/3 of customers are actually shifting over to smaller projects, while others are also buying some cheaper materials to save on those upfront costs. It's also important to highlight that the housing stock is aging in the U.S. About 50% of homeowners are living in a home that was built before the 1980s. So that means a lot of them are going to need to upgrade their kitchen, their bathroom, their roof, possibly adding more rooms to their homes. A lot more people are staying in their homes for longer periods of time now. And given to that reason, a lot of them are actually making changes and accommodating to their needs. So that could be a tailwind for the home improvement sector, Shauna.
See whether or not that comes to fruition. All right, Dani, great stuff. Thanks.